Hello, good morning, everybody. Good morning, all. Please, can you all hear me? Can you hear my voice and see my screen clearly? Okay, good. All right, I greet every one of you and I thank you for coming. How is your trading? Yep. How is your trading? I hope you guys are trading. Oh, we had a signal last night. I mean, if you took that signal. I mean, if you took the signal that was posted last night. Good morning, Dr. Michael. All right. I mean, if you took the signal yes last night. It seems nobody took that signal last night. If it if you does it mean please can you guys hear me? Can you guys hear me very clearly? Let me see if the network is balanced so we can continue. Okay. Somebody said price break the resistance line. Price did not. Which resistance line are you talking about? Price has not broken any line now. This is not the resistance line. This is the resistance line now. Price instead was rejected by that resistance line. Can you see this? This was where I placed the sell limit last night, and the sell limit dragged the market down here to this place. But unfortunately, it didn't hit our take profit. Our take profit was too long. Was too. Our take profit was too large. That is it. But I expected the market to come down here, but since the market is still an uptrend, I'm thinking of because the market, the pullback is a little bit strong. So nobody took that trade last night. Nobody took that trade. If you took that trade, can you indicate? Good morning, Joseph. Okay, I took the trade. Are you in profit? David, are you in profit? I took the trade. Okay, yes. The volatility 75 trade, the 75 sell limit that was posted on the group. I was actually on profits, but right now the profit has shrunk because as I woke up this morning, I discovered that the market pulled down here. All right, the market pulled out to this point. That was a very large profit. This was where the take profit was set. This was where the sell limit was placed. Can you see my screen? Can you see the cursor? And is my voice also clear? Okay, I made some profit. Okay. All right. Somebody say which trade? Okay, okay, I made some profit. Okay, the sell Gabriel. All right, good. This trade was taken here. You see the reason what I told you in this place that okay, your voice is clear. Good. I said our this market respect zones. So if you can comfortably learn how to draw these zones, you can make uh, money every single day with your smartphone because it respects these zones. All right, let me tell you the reason why I actually took that trade. Let me let me take this thing down to daily. Okay, let me tell you the reason why I took that trade. The reason why I took that trade is this. Let me remove some of these old lines so you won't be confused. All right, so the reason why I took that trade yesterday or last night was this. If you look at this market, few okay. Look at in the past, market is all about history. Any market you want to trade, look at the history of the market. Look at the history of the market. In the past, in the past the market has been turning from this place. This is a turning point. Here is a turning point. So as the market got to this point, because I know it was the other time the market turned from here. So that's why as I saw that market is going close to that zone again. It's a zone. But you have to draw your zones correctly. Though our topic to know this morning is not about zone, but let me just talk a little bit about zones. All right. So you have to draw your zones correctly. Once you know how to draw your zones correctly, you make consistent, you make profit from the market consistently. Because this market respect zone, we have minor zone and we have major zone. Major zones are places where price turn massively. Like here is a major zone. Now, how do you know that here is a zone? You go back a little bit to your history. You you go back what price has been doing in the past. Let me see if I can go back a little bit. I'm trying to go back. Maybe I'll use trading view. Maybe I'm going to use trading view. Let me use trading view to talk about these zones this morning. Let's wait for the network to come up. This you can't hear anything. Somebody say I can't hear anything. Please, can you hear now? Can you hear that? Please, can you hear now? Okay. All right. Okay. If you can't hear, okay, the network is bad. Let me just use this trading. What is it called? MT5. Okay, I can hear. Okay, good. All right. So now, why I took this trade was because I saw that year was once a turning point, and once you discover a turning point, is most likely is not a guarantee, 100% guarantee, but most likely price usually turn from where it has turned before because it's history. So you want to draw these zones correctly. If you draw wrong zones, if you draw your zones on wrong places, you have a wrong result. As in, your trades would suffer because you are going to be placing trade on a place maybe it's supposed to be a buy, but you are going to be placing a sell. So the most important thing to do is to draw these zones correctly. And the best way to draw them is to come to a higher time frames like this, like 1 day. This is daily time frame. You can now go back to um, this is 4 hours. I've reduced it to 4 hours, right? And 4 hours will tell you 4 hours will also tell you that here is a zone. Look at when price go to this place, price turned down massively. And the trade I placed last night, I called last night, was placed here. Let me bring it down to 1 hour. Let me bring back to 1 hour. Now the place was trade here. It was a sell limit order I placed here, and the price came down. The market moved down to this level. Let me even bring that to 30 minutes. But unfortunately, most of us, unfortunately, it did not yet take profit yet before reversing. I don't know if it's going to be a pullback or it's going to be the upside, but some people that were awake must have made some money from that trade. If the market came all the way here, see, this market, even if the market is on an uptrend, all right, market usually have pauses on this support and resistance zone. If you look at this place very well, this is a zone. Before market went, before market went through this place, this zone stopped the market first for some time. It stopped it, and then now formed what is it called, resist support down here. before this massive move continued. All right, let me show you. All right, so it formed resist. It got here. The resistance zone pushed the price down here. It went up again. It pushed the price down to this support again. So you can see that here, these two places, they were strong zones. After this push again, market went up a little bit, push it down before the market skyrocketed to this upside. And that is what is happening here too. It has gotten to this place, pushed it back. It went up again. Now it has, let me put it down to 15 minutes. Okay, you can see that even the 15 minutes time frame, the price went up last night. This was where we took our trade. It pushed the price down here. We must have made some profit. Those of us that were awake, even if we didn't know it or take profit, it pushed the market down to this up again. Now it is pushing it down. You can see that after touching this place, the market is now coming down again. All right. So once you learn how to draw these zones, you will make, look at there, look at this place. Price touch here, push it backward here. It moved up again. This is the second time. It pushed it down. It moved up, push it down again to this level before price started the major up move that is here. So what am I saying in essence is that learn how to draw these zones. This market respect zones. Look at very clear 1 hour. This is very clear. Once you learn how to respect this zone, learn how to draw your trend lines. We don't trade with indicators. All those softwares, indicators, robots, all those things are not, to me, my own opinion, as I study this market, what I discovered that even the professionals in countries that are making $1 million, $2 million a year profit, those guys, most of them don't use indicators. Most of them don't use indicators. The ones that made more money in the market, they don't use indicators. You can see with your eyes that the market respects all these zones. All right, you don't need, and then you add some candlestick patterns to confirm your entry point. The entry point for yesterday's trade was very aggressive. Last night's rather, the last night trade, that sell limit was an aggressive trade because ordinarily you are supposed to wait for a confirmation candlestick before you place a sell. But that was an aggressive entry, and the aggressive entry pays. It gives you an opportunity to enter the market earlier. You can say this is daily. I can bet you that if price break through this zone and get to this place, it will pause. It will pause. It will pause because why? You are trading with other people. Market is history. People are remembering. They remember what the market has done in the past. So once price approach this zone, even if it is an uptrend, the market players, they are watching. They say, the last time market got to this zone and it turned. That means that most likely the market will still turn back from here again. So as the market is approaching these zones, people are taking their profits. So the market, the market will now either push back, turn back from here, or push down a little bit, a pause like a break, just like you are traveling on the road and you got to a point where you are stopped by either a roadblock or a big pothole. If it is a major zone, all right, it will be like a big pothole that you can't pass. You can't pass. It's either you turn or you stay there for a long time. That's how the market works. But if it is a minor zone, price will just touch there, pause a little bit, 1 or 2 candlestick, and then pass that zone. But you can see this zone here was a major zone. That was why price touched here and turned massively down to this place. All right. So once you identify this zone, you have an edge over people who trade with indicator to give them signal. You think it got here, but it turned. This is 4 hours candlestick. Most people must have made some money. I was in profit, of course, too, at night, but I slept off and it didn't use or take profit. But we are still hoping that the market will still come. It will still come back to the downside because it was once a turning point. You can see breaking is slowing down because the people that are watching this market, just like you are watching this market, other people are watching. So they are trying to take their profit and more people are hitting buy. But if the sellers overpower the buyers, it will push the price to the downside massively. All right. Let's talk about trend, how to identify trend. That's the major topic for today. How to identify trends. Let me, I hope you guys can still see my screen. All right, good. Now we want to learn how to identify trends. Hi. This market. Oh, wow, 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 wow. Hmm. This is Euro USD. Let me bring this chart. Let me remove everything I have on this chart and identify this trend. I'm going to remove everything. Let's draw this thing. All right. Now the price is on a plain chart. Now, how do you identify a trend? A trend is when price makes series of higher high and higher low. A trend is when price makes series of higher high and higher low. An uptrend rather is when price makes series of higher high and higher lows. What is a downtrend? A downtrend is when price makes series of lower low and lower high. Write it down. A downtrend is when price makes series of higher, lower low and lower highs. So now, how do you identify a trend and how to trade with a trend that you have an advantage over people who don't know this particular secret that I want to show you right now? Now, let's put this chart to maybe, let me see 1 hour chart. I want you to identify real trend. Okay. All right. This market, according to the 1 hour chart, is, let me put it to 30 minutes. I want a very long trend. All right. Now, for you to confirm a trend, take it to you don't have to use indicators on this. This market is a massive buy. I think something, this market is a massive buy. This market closed like this. I'm going to buy. All right. Let me identify, show you a trend and how to take advantage of. Okay. Okay, now let me first of all go with the uptrend. Let me give you explain what is an uptrend. If like I told you, an uptrend is when price makes series of higher high and higher low. That is what an uptrend is, and you want to draw your trend line. And how do you discover the trend like this now? This is an uptrend. It means that look at this high, price move from here, right? Price do this. This is your up. This is the confirmation. If price does this, move up a little bit, push down, then move again the second time, push back to this particular place, you know that the price has started an uptrend. But there are two important aspects of trend in the market. Once you see something like this, you see a market moving up and then comes back to test that particular place. It's called either pullback or retracement. That is a confirmation that the market has started an uptrend. One, two, price move up, comes back to test. All right, this and this. This is a confirmation that the price has started an uptrend. The price has to first of all move up a bit, come back, and then come back to test that particular place. This is an indication of an uptrend. And as a trader, you want to buy the pullbacks, as in you have to buy when price moves up again and then pull back. You don't want to buy up here. So most people chase trend. When they see a market going the up direction, they just see market maybe after this pullback, market started moving up here, they buy. No. When you see a trend pullback and then move up again, if you don't enter from this pullback, don't enter. You don't have to enter. Wait until it comes back again for a pullback. Because market don't just do straight movement. It's usually like this, like this. All right, it does like this, and a trend market does like this before going up. So you don't want to buy. You don't want to buy from the top. You want to buy from the down. But there are two very important things about trending, so that you don't buy trend that is dying. You don't buy trend that is dying. You don't want to cut up uh, in a place where you are supposed to be selling, but you are still buying. How do you discover a trend that is dying? Now, there is what you call health and momentum about trending. When the market is trending, you want to know this health and the momentum of the trend. The health has to do with the movements, this pushback, how deep is this pull, this move up, right? This is what you want to push. This pushback, this up movement is a health, right? Then the momentum is also the pullback downward. So this is a health. If you see a trend like this, it means that the trend is healthy and the momentum too is still healthy. You want to buy the trend pullback. Now, what you want to do is after this pullback, as you are watching the market, after this pullback, watch this other pullback again. Look at what happened. Market pulled back, market move up rather. It means that this move up is the health. The pullback is the momentum. It means that even here too, the trend is still healthy. But the momentum, look at, you want to measure this with the former one. If you look at these two, which one is longer? Which one is longer? These two lines, which one is longer? Let me delete this. Which one is this and the which one is longer? Is it the first one or the second one? The second one, good. It means that the strength, the trend is still healthy. All right. So You want to continue in a market that still has strength. There is strength, there is still power in the trend. So you can buy the pullback. You don't want to buy up here. Allow the trend to go up and then come back. Then price did another movement again, the second one, right? Price did another movement again. This one, a move up again to the same place, almost the same place, then see the pullback too. Even here, you can see that the price, the trend is still healthy because the momentum, though they held, it's not, the pushback doesn't really move far a little, but it's still healthy. Why? The momentum is strong. Why? Because the pullback is not strong. If you see a trend, a market that is trending, and the pullback is maybe let's say market move like this, and then pullback is so deep like this, you should know that the market is either trying to go back to the downside. So this one, for this one, is still strong. The momentum is still strong. But look at the pullback. Look at it went up from here, right? It went up from here. But look at the pullback. The pullback is very, very small. You measure it with the former movement, you know that this trend too is still healthy and the momentum is still strong. So you want to buy this pullback. And when do you buy? You wait. As the price pull back, this is your confirmation candlestick. This after this last red one, whatever chart you are using, this blue, this green should be your confirmation candlestick. So you use this after the closure of this particular candlestick, you place your buy. You cannot ride with the trend. Do you understand? You can see the price touches here. You see, now you have already drawn your trend line at this moment. You started the trend line from this second touch. After the second touch, you draw your trend line, and then you wait for price to touch this line before you place a trade. You can see that price came down. This one was a deep pullback though, but it still continued from the touches. Look at here. It's like magic. These touches, it went up all the way before crashing to the downside. So what am I trying to say? When you are following a trend, try and measure the movement of the trend. Is the pullback too deep? If the trend is going, if the trend is going like this, let me remove everything again. If the trend is like this, price move up here, move up here, move up here, right? Then deep. This time you have to become careful because the dip is too much. Look at what the price did. It moved up, but look at the dip. The price moved up again, even struggle to make the higher high like this. You have to now remember that the sellers are coming in because the strength is no longer there. You want to only buy in a market that is doing a pushback like this, it move up. It pulled back like this, it move up. You pull back like this, it move up. This is a healthy trend and the momentum is strong. It means that after this pullback, you buy from here. After this pullback end, you buy from here. After this pullback end, after this move up, you buy from this down. You don't want to buy up here. There is what they call channel. People who trade channel. Channel is like this. You are drawing your trend line from here. Let's say you're drawing your trend line from here. Right, let's say this is your trend line. All right. Then those that trade channel is here. A trade channel like this. This is called channel. When you see something like this in the market, what most amateur people do is this place. If you see channels like this, you can sell from this channel. Instead of buying, what amateur people do after a trend move, they just see, market is going up, up, up. Market is going up, up. Instead of waiting for a pullback, it's just like jump into a moving vehicle. You know how you struggle, how difficult it is to jump into a moving vehicle. So you just jump into a moving vehicle. You don't have to jump. You have to allow the vehicle to slow down before you cannot quietly jump inside if you want to jump. All right. So what most amateur people do is they see a market doing this and they jump up. Don't do that. If you do that, you are stop loss. Imagine you jump up here. Maybe your stop loss should be down here. All right. The market can just go and okay, you jump here. Your market could just fall immediately after you jump in. Before you know it, your stop loss, they will wipe it down here. Your stop loss is down here. Maybe sometimes it will just wipe you wipe your stop loss before going to the upside. So you want to allow this down up movement to end, and you want to be measuring the movement. If the movement is strong or weak, you jump in here, you buy. Allow the trend to go up here. People who train channel, once you have discovered a market that is showing you this kind of movement, channel, you sell from this up. So what the major players do is that they sell here. Why amateur jumping to buy? They are selling and waiting for the price to come to this trend line and then buy again. Please, am I making sense? Do you understand what I'm explaining here? All right. Okay, good. All right. Okay, good. All right. So now you want to buy a trending market, but you don't want to buy a trending market that is fading up. So whenever you're looking for a trending market, you have to know how deep the pullback is. If the pullback market is like this, move up like this, then deep. Then before it struggles to make the higher high, maybe like this, deep again. You should know that the market is no longer, the trend is dying, it's no longer strong. So you have to stay clear of a market that is weak, getting weak. If the trend is becoming weak now, you have to stay clear and allow the market. The market will do one thing. It will either do consolidation. Let me show you, for example, here. Okay. Now look at this here. The market went up from here, went up from here. This was a pullback. All right, people were still buying. It was still good to buy, but if the health, there is health and there's momentum. Now you can buy this pullback. Now after buying this pullback, look at what the market did. It even struggled to pass the former move. It was struggling to pass the former higher high. Let me show you something. It struggled. It struggled, but look at the pullback. The pullback is deep. Even if the price buyers try to push the price upward, but the pullback is deep. This one, buying this is very risky. Buying this kind of pullback, just because the market has been trending, and this deep, when you see a deep pullback like this, the market is too risky to buy. You can see what happened after this pullback. The price, let me show you. After this pullback, look at what happened. It moved up, but people were still buying. Maybe I'm not sure you're still buying. As they are buying, the market is, look at the market change direction and started a new downtrend. You can see how it works. So know when to get into it. The trend is your friend, of course. You ride with the trend, all right? You ride with the trend, but you don't want to jump into the trend without allowing a pullback to happen. Like, look at this now. You want to watch when the trend is fading out, when the market is fading out, when the trend is no longer strong. Be watchful. Like this now. This market. Good morning. This market now, as it is now, what amateurs want to do, they want to jump into this market. This market has been doing a down movement, all right? But right now, I am not going to buy this market until I see a pullback. Let it go. Let it go, right? Let it go. Only time I will buy is if it you do like this and then do like this, then I will buy. So if you see a trending market, don't jump into the market like that. Allow this market to come back for a pullback. This market should come back for a pullback before you buy. Look at it's going. Don't jump inside. This is what most people do. They see a candle's going. If that market is going up, market is going up, they jump into the buy. Now you allow this market before you know that it's a trend. Let it do something like this. Let it come back and do a retest. A retest. It should come back here. It should go. Come back and do this. Then a sign shows that you are riding. The market wants to go up again. You buy. Now, if it does this, you have to your confirmation candlestick. Since you are using 1 hour to analyze the market, your confirmation candlestick will be 1 hour time frame. 1 hour. If a green bullish candlestick form, let's say this is 8 o'clock after 15 minutes past 8 now. Now, if the price after doing turn back, maybe 4 or 5 candlestick pushback, then give you a bullish green candle. Let me show you something. After a pullback, okay. Now, after the pullback, all right, the correct way to trade a trend that is pulling back, after the pullback, if the price shows you something like this, after some red candlestick, all right, if it shows you something like this, then you buy after the closure of this particular candlestick. You guys understand? That's how to trade in a trending market. As you are buying, you want to watch out for this. Like I told you, you want to watch out for the movement. As your buys are on, watch out for the movement like this. How deep? All right. This one is strong. If you see something like this, if you move up, buy here. Don't buy up here. Buy here. Okay, let me show you here on a downtrend. See on a downtrend here. Okay. Now the market has been on a downtrend. All right. This downtrend like this, downtrend is when price makes series of lower low and lower high. It means that look at the low, look at the low, look at the lower. This is where the market start from. Market did this, it pushed up. All right, that is the first move. All right, this push up. You can enter your trade after the formation of this. Let's say for instance, for this was a confirmation candle. Say this red one, or this was a confirmation candle. Your stop loss should be up here. Look at it. It's moved down here. Right? It's pushed up. This bullish, this reddish, this particular bearish candlestick is your entry point. After the closure of this candlestick, you can place either a sell stop, a pending order, or you enter instant execution and your stop loss will be above the recent high. So this is a lower high. Then price does another thing again. It pushed down. All right. Yeah, you agree with me that the market is still healthy because the push is still strong. Now, as a trader, you want to sell after this candlestick, after this one. This is your confirmation candlestick. So now this low, this high, this high is higher than this one. This low is lower than this. That's what it means by lower low and lower high. Are we together? Are we together? All right. So this is how you trade your trend. You don't use indicators to confuse you. With your open eyes, you can identify a trend. You can identify a trend. A trend will form when price start making series of higher high and higher. An uptrend is when price makes series of higher high and higher lows. Higher high, higher lows. Higher high, higher lows. A downtrend is when price makes series of lower lows and lower highs. Now you want to trade only the pullback, but you want to also trade when you want to check out as you're trading the pullback. You don't trade every pullback. That is what I'm emphasizing here. You don't trade like this one. Now look at the pullback. This one too, it was a deep one. Market consolidated here for a while. After this particular candlestick, this was their confirmation candlestick. This one here, the price moved down. It was a then the second one. Look at the second one. The second move, it moved down. All right. Here too, it was still healthy. You want to place your sell only on this pullback. It is called also retracement. It is also called retracement or pullback, whichever name you want to call it, retracement or pullback. You want to do this, you measure it, you can see that the movement is strong, so you can buy this pullback. So there is health and momentum, so you can buy the pullback here. It has to show you a bearish candlestick before you can continue. Now price came down again. Price came down again. It look at it came down. Look at pullback. It did a small consolidation here, but after this was your confirmation candlestick here. This was your confirmation candlestick. After this pullback, you can see that price came down, but it was ranging for a while before this massive movement is happening right now. It's now going to the upside, but now we are not buying. Okay, somebody said, can we know if it ranged a while at its pullback? Uh, can we know if it will range a while at the pullback as it does not? Okay, sometimes it ranges. The range takes place, and you may not know when it's going to go up. All right. So now the price range here. So all these ranging periods, you don't want to do anything. You just have to be watching the market. All these places, you don't buy, you don't sell, you just watch what's going to happen. It has been ranging here for some time. But if this place is a strong zone, if you discover with your higher time frame and you discover that it's a strong zone, if you want to be very aggressive, let's say we use a higher time frame. This one is very aggressive, but it pays. Let me go back with 1 hour. Let me say, all right, let's say, let me just put, okay. Now, as this ranging place, all right, let's watch if this place is a zone. If price range like this, if it is a major turning point, if it is a major turning point, if you see ranging something like this, you can see that risk is very aggressive. All right, let's check out. It's very, very aggressive, but it pays. It pays. Somebody said, yes, yes, there are a lot of candlesticks, of course. Now, if this place is a major zone, all right, if this place is a major zone, now this is weekly. We use weekly to find out if this is a major zone. If this place is a major zone, you can see the price the other time got here. This was February. Price got to this zone and turned. How many pips? This is weekly. You want to go with a weekly. How many pips? Almost 500. Okay, if you go to 700 pips before coming down, all right, 700 pips before coming down. Let's go back again. History. Look at it here. Price went up from here. It came down to touch this zone. It went up. It came back to touch this zone. And another major zone is here. This is also a zone. I'm showing you how I trade my market without using indicators. All right, this is a zone. You can see it. These two places are zone. Now, if you want to be aggressive, as price touch this zone after downtrending, as price touch this zone after trending for a while, an aggressive trader will not wait for a confirmation candlestick. That one pays a lot. An aggressive trader will place a buy here. An aggressive trader will buy here. He or she will buy here. It pays. You can see that price have been, let me use 1 hour. You may not make profit immediately. All right. Why? The benefit of buying there is two things. Your stop loss is small. You're taking small risk, and your potential profit is bigger. Somebody said what of when the uptrend and downtrend are moving at the same level? How do we enter this? There is no way uptrend and downtrend will move at the same level. Or I don't understand the question. An uptrend, you identify it. If it is a downtrend, you identify it. An uptrend will make series of higher high and higher low. Like this now was, oh, this was a clear downtrend. This was a clear downtrend. This was a clear downtrend. All right. So if this was a clear uptrend, this was a market trend based on the 1 hour time frame. Remember, every time frame, this was a clear uptrend and this was a clear downtrend. So as I was saying, an aggressive trader will place a buy here, and the reason for this is this: if you make profit, if you lose small. Your stop loss, if you place a buy here, your stop loss will just be maybe a few pips. Let's say you just reach like 30 pips stop, 40 pips stop loss. All right, and then you take a buy from here and maybe take profit here about 70, or yes, it's like 70 because this is the next zone. This is aggressive, but it pays more than waiting for the confirmation. If you lose little. If you gain more, but it's a little bit aggressive. So guys, this is how you understand trending market. Trending market is when price makes series of higher high. Yes, you can use it for VS. You can use it on VS. Any market, you can use it. It's all markets are human psychologists. Human beings are the one trading. It's emotions, people's emotion. They see this thing. The way you are watching is what everybody is watching. Now you understand what downtrend means. A downtrend is when price makes series of higher high, a lower low, and lower highs. but you don't want to place straight down here. You want to place a pullback, and you also have to measure the movement of the pullback. Is it too deep? If it's a pullback that is getting too deep, then you have to now stay out of the market. If your pullback is too deep, like I told you, let me illustrate again. If the pullback market is doing this, doing this, then all of a sudden this happens. Then maybe try to go up, try to go up, try to go up, try to go up. Then maybe try to manage to pass the higher high. Then this happen again. Don't buy this pullback. The market is becoming weak. If you buy this pullback, the market may end up doing like this. All right. So just watch out for this kind of movement. It may end up like this. So don't buy. Buy when you see that the pullback is still strong. Buy only. Let me show you. Buy only this. Buy only this. Buy this. Do you understand? This is a healthy uptrend. After this pushback, you can buy here, enter the right. This happen. After this, if you miss this trend, allow it to go. Don't buy. Wait for the pullback to happen. If a pullback comes, here you enter. If the pullback comes, here you enter. If you miss this move, don't buy. Wait for this down to come. This is a healthy trend, a trend that has momentum and a trend that is still healthy. So that is how you trade a trending market. A healthy sell is the same thing, opposite. All right, a healthy sell is this. Okay, a healthy sell is this. A trend that is healthy, sell, right? It will come down, you go up, right? To come down again, push back, come down again, push back, come down again, push back, come down again, push back. You want to buy this pushback. You want to sell here. You don't want to sell down here. Wait for the pullback to end. You sell here. This is a healthy downtrend. You want to be selling up here. This is what we call higher, lower. This low is lower than this. So it's lower low, lower low, lower low, lower low, lower high, lower high, lower high, lower high. So when price makes series of lower high, somebody said, let me read that message. Please, what is NAS 100 step index and crash and boom for analysis sake on the binary trading for the test diagram. Step index. Well, those are instruments that you will trade on the volatility indices. So it's markets are many. Like I told you, markets are so many of them. How do we identify them? Do you mean the analysis or what? I don't mean. What do you mean by how do you identify them? They are there. Step index is there now. Step index is on your chart like this. This chart is for step index. You find them on your watch list. You can add them. If you don't see them, you can add them. You can add them from here. All right. Okay, guys. Good morning. Okay, sorry, there was no audio. You allow the pullback to end. For a sell, for a downtrend, you allow the pullback to end. You want to sell here, you want to sell here, you want to sell here, you want to sell. You don't want to buy down here. You don't want to sell down here. If you know how to trade channel, this is when you buy. But this is very, very professional way of trading. Somebody said, can we draw the resistance and support with trend line or channel? Yes, you can combine them with support and resistance. It means that when you draw your support and resistance in the trending market, what you are expecting is once price gets to that support and resistance level, it will push back, it will have a pullback. So you wait for that pullback to end, then you sell, you buy. Yes, you buy an uptrend and sell a downtrend. Yes. If you combine it with your support and resistance level, meaning that once you get to that support and resistance level, if it's an uptrend, you know that it is going to push back for you to have an entry again. So you combine them with your support and resistance level, you watch the momentum. Okay, please display icon on MT5. Okay, is here. Look at it here. This icon is it price, see price and price date and price range. If you have not added it to favorite, you see it this down. Add it this yellow meaning that add to favorite. So you see it once you see it, you right click. You click like it, right click, then you drag it upward. All right. Okay, guys, we have come to the end of today's training. I want you to take your time to master this thing, read those books that you have, read your books and practice this thing on your own. Don't be emotionally attached to your money. Don't be emotionally attached to your money. When you lose, accept your lose as the day, accept the lose for that day. Don't feel bad over that loss. The day you gain to don't even when you make money, don't be excited about the money. It's good you're happy about the money, but the reason why most people are so emotionally attached is because they are so excited. You see the dollar sign, they are so crazy with the dollar sign. Don't attach your emotions to your wins and your losses. Okay. We'll talk about that in the basic class. That's the one that you said the mobile cannot. There's a setting for it. There's a setting for it that if you draw it on your mobile, it will stay. We'll talk about that on the uh, basic class. So, guys, don't be emotionally attached to your trading. Accept your losses and then try again next time. The day you win, celebrate, but don't be emotionally attached. See trading as a game of, as a fun thing, not something that you begin to struggle. That's why you have to also teach your support. Okay, next class we'll talk about support and resistance. That's why you have to minimize your risk. Don't overtrade. Don't take too much risk. The reason why most times we are emotionally attached is because of our risk. We are taking too much risk on our trading. Trade with a loss size that you can comfortably manage if you go the trade go against you. All right, guys. Timmy, we'll talk about all this. Let's just reserve our question for next class. All right. Have a good day. Thank you. God bless you. All right. Bye.